What is Bitcoin mining? How does it work? 1. The process of Bitcoin mining involves the verification of new transactions against the Bitcoin network, which results in the production of new Bitcoins. 2. Bitcoin mining is the process by which Bitcoin transactions are validated digitally on the Bitcoin network and added to the blockchain ledger. 3. It is done by solving complex cryptographic hash puzzles to verify blocks of transactions that are updated on the decentralized blockchain ledger. Solving these puzzles requires powerful computing power and sophisticated equipment. In return, miners are rewarded with Bitcoin, which is then released into circulation, hence the name Bitcoin mining. What is Bitcoin? Bitcoin is the first decentralized digital currency that allows peer-to-peer transfers without any intermediaries such as banks, governments, agents, or brokers, using the underlying technology of blockchain. Anyone around the world on the network can transfer Bitcoins to someone else on the network regardless of geographic location. You just need to open an account on the Bitcoin network and have some Bitcoins in it, and then you can transfer those Bitcoins. How do you get Bitcoins in your account? You can either purchase them online or mine them. Bitcoin can be used for online purchases and/or as an investment instrument. Primarily, it's used to buy goods and services. Bitcoin advantages. Compared to traditional fiat currencies, assets can be transferred faster on the Bitcoin network. The system also has lower transaction fees, because it's decentralized and there are no intermediaries, and it is cryptographically secure. The identities of the sender and the receiver are kept hidden, and it is impossible to counterfeit or hack the transactions. Plus, all the information is available on a public ledger, so anyone can view the transactions. What is blockchain? As mentioned, blockchain is the underlying technology of Bitcoin. Blockchain is a public distributed ledger in which transactions are recorded in chronological order. Any record or transaction added to the blockchain cannot be modified or altered, meaning transactions are safe from hacking. A block is the smallest unit of a blockchain, and it is a container that holds all the transaction details. A block has 4 fields, or primary attributes. 1. Previous hash. This attribute stores the value of the hash of the previous block, and that's how the blocks are linked to one another. 2. Data. This is the aggregated set of transactions included in this block, the set of transactions that were mined and validated and included in the block. 3. Nonce. 3. In a proof of work consensus algorithm, which Bitcoin uses, the nonce is a random value used to vary the output of the hash value. 3. Every block is supposed to generate a hash value, and the nonce is the parameter that is used to generate that hash value. 3. The proof of work is the process of transaction verification done in blockchain. 4. Hash. 4. This is the value obtained by passing the previous hash value, the data and the nonce through the SHA-256 algorithm. It is the digital signature of the block concepts of blockchain. To understand Bitcoin mining, you have to first understand the 3 major concepts of blockchain. 1. Public distributed ledger. 1. The distributed ledger is a record of all transactions maintained in the blockchain network across the globe. 1. In the network, the validation of transactions is done by Bitcoin users. 2. SHA-256. 2. Blockchain prevents unauthorized access by using a hash function called SHA-256 to ensure that the blocks are kept secure. 2. They are digitally signed. 2. Their hash value, once generated, cannot be altered. 2. SHA-256 takes an input string of any size and returns a fixed 256-bit output, and it is a one-way function. You cannot derive the reverse of the input reverse fully from the output. 2. What you have generated. 3. Proof of work. In blockchain mining, miners validate transactions by solving a difficult mathematical puzzle called proof of work. 3. To do that, the primary objective of the miner is to determine the nonce value, and that nonce value is the mathematical puzzle that miners are required to solve to generate a hash that is less than the target defined by the network for a particular block. 3. Bitcoin profit and Bitcoin mining profitability. Bitcoin Profit is an automated crypto robot that helps trade bitcoins and other cryptocurrencies to earn profit. It uses an AI algorithm to identify trading opportunities in the crypto market that can automatically close and open your trade, saving your time and manual intervention during trading. It claims that around 85% of its trades produce profits in normal market conditions. However, technical knowledge is required to calculate the profit generated through the Bitcoin mining process. Talking about the actual Bitcoin profit, the real money making, it depends upon the cost of the AISC hardware, electricity consumption, and the effectiveness of the mining software. Bitcoin mining profitability has decreased in recent times compared to the previous years because of the rise in electricity costs, costlier hardware, difficulty in mining due to an increase in competition, and a decrease in the Bitcoin prices. Earlier, Bitcoin mining was initiated using CPUs and easy AI algorithms, making it profitable and less costly. Bitcoin versus traditional currencies. While both Bitcoin and traditional currency are similar in that both are a store of value, they differ in many ways. First things first, Bitcoin is the first and most recognized cryptocurrency, a digital currency that is secured by cryptography. Traditional currency, also referred to as fiat money, is a government-issued and regulated currency. Blockchain is a decentralized peer-to-peer network that has been hailed as highly secure and transparent, hence trustworthy. This is because records in the blockchain network are secured using timestamps and cryptographic hash functions in such a way that after being added to the ledger, it is almost impossible and impractical to alter the transactions. At the core of blockchain security is the absence of centralized control. Here is a breakdown of what happens during Bitcoin mining. The mining requirements. A Bitcoin miner will first select their tools of the trade and set them up. These include 1. Hardware GPU, Graphics Processing Unit, SSD for crypto mining, or ASIC, Application-Specific Integrated Circuit. 2. Mining software. 3. A wallet. 4. Preferred mining pool, if one chooses pool mining option instead of solo mining. Once all these are set up and the system fired up, it performs the mining process autonomously. Any other human involvement comes in the event of system or network failure, power outage, or regular system maintenance. Elements of a Bitcoin transaction. When a transaction is initiated in the Bitcoin network, 3 elements are involved. 1. A transaction input. 2. A transaction output. 3. The transaction amount. For every transaction input, a Bitcoin mining software generates a unique cryptographic hash puzzle that is difficult to decode. The software then groups the number of transactions required to form a block into a Merkle tree. The Merkle tree and the SHA-256 algorithm. A Merkle tree is a data structure of the hashes in a block and acts as a summary of all the transactions in the block. In the Merkle tree, hashes of individual transactions known as transaction IDs are paired repeatedly using the SHA-256 algorithm until only one hash identifies the entire tree. This hash is known as the Merkle root or root hash. The Merkle tree enables the efficient verification of transactions in the Bitcoin network. The block header. The Merkle root, the identifier of a Merkle tree, is stored in the block header. The block header contains information about the block and includes the following components. 1. The version number of the Bitcoin software. 2. The hash of the previous block. 3. The Merkle root, root hash. 4. Timestamp. 5. Cryptographic nonce. 6. The target. This is the information miners will use to solve the hash puzzle and add a block transaction. Solving the hash puzzle. Miners must solve the hash puzzle by finding the hash below a given target through the difficulty requirement. The target, stored in the header, is expressed as a 67-digit number that will determine the mining difficulty based on the number of miners competing to solve a hash function. It is important to note that this difficulty adjusts after every 2016 blocks are created depending on how much time it took miners in the previous 2016 blocks to solve an equation. This also helps to maintain the rate at which transactions are appended in the blockchain at 10 minutes. To solve the hash puzzle, miners will try to calculate the hash of a block by adding a nonce to the block header repeatedly until the hash value yielded is less than the target. Once a mining computer solves the puzzle, a new block is successfully created that is validated in the Bitcoin network after a consensus between the nodes has been reached. When a block is validated, the transactions bundled in it are verified and the block is added to the chain. As indicated above, this happens every 10 minutes. As there will be many miners, systems, competing to solve the puzzle, the first miner to get the correct hash value earns a reward in Bitcoin. This process allows more Bitcoins in circulation.